Good morning, guys. What's going on? Your favorite mortgage lender, Abdel Khawatmi, with Paramount Residential Mortgage Group. Wanted to kind of talk to everybody in regards to refinances over the last couple of weeks. Refinancing market has obviously boomed. I'm sure most of us is already aware of this and heard a million people talk. One of the things I want to talk about today are the different types of refinances that are currently out there. And the first one and the most common one is called a rate and term refinance. The benefits of having a rate and term refinance is self-explanatory from its wording. You get to reduce your rate, and you also have the opportunity of cutting your term. So what would be some of the benefits of cutting down your interest rate? Obviously, saving on your mortgage payment, paying less interest, and then most importantly, being able to pay the loan off a lot quicker without a negative amortization currently coming into place. And then you also have cutting your term. So I have a lot of clients that are currently sitting at a 30-year mortgage in the 4 or 5%, refinancing into a 15-year mortgage at about 2.5%, 2.7%, even 3%, and then paying about the same payments, if not a little bit more, or in some instances actually less. One of the benefits of you obviously paying your loan off in a shorter amount of time frame, you own the house quicker, okay? You pay less interest, most importantly, and you're paying the loan off significantly a lot faster than somebody who's in the same ballpark as you, okay? Now, another type of refinance that's out there is called a cash out refinance. What are the benefits of doing a cash out refinance? Let's say, for example, you currently have a home that you want to do a little bit of renovations for. When you first got the house, you just got a standard regular, whether it was an FHA mortgage or a standard conventional mortgage, and you didn't want to take on a 203K or a home style or any type of renovation. Now you've paid significantly into your house. You own a good majority of your portion because for a cash out, you're actually capped out at the amount of money that you can take out. So the bank is not going to want to lend you for a conventional loan more than 75% LTV or 80%, which makes sense, right? That's why they mandate mortgage insurance and so on and so forth. Okay, so when you do a cash out, one of the main reasons why people do it is to do some renovations towards their home. You can take out a certain amount of money up to your cap where you're at with your loan to value or your equity in the home. And then you also have the capability of taking that money out. It will now get rolled in as a second mortgage. And then you can actually have the renovations done to your home. One of the reasons to have these renovations is obviously you're going to increase the looks of your home, which is going to increase the value and the capability of it increasing significantly. So those are two of my recommendations in regards to cash out refinances. Now, the refi market is extremely, extremely hot. People also need to keep in mind there are some closing costs that are associated when it comes to purchasing a home. And now the same thing when you come to refinance. It's not as high. It's anywhere from $6,000 to $9,000 depending on your property taxes, depending on your escrow, and depending on the recording fees and so on and so forth. People must keep this in mind because although it's a short-term capability of you having to pay that $6,000 to $8,000 to $9,000, sometimes in the long run, and most of the times, you're going to be saving $25,000, $30,000, $40,000 off of your mortgage, okay? People need to keep that in mind. When you have a conventional, you actually have the ability of rolling in all those closing costs. So when it's an FHA, though, you are not allowed to roll in because FHA, through the federal government, mandates a cap at the loan to value. So keep that in mind when you are looking to do it. FHA refinance is a lot easier because it's called a streamline refi. Don't need an appraisal. You don't even need to worry about income as long as the client is employed and currently working. He can qualify for a refinance, and it's only based off of as long as he has a minimum of a 620 credit score, then you're able to do that as well, okay? If you guys have any questions whatsoever, you're more than welcome to contact my team and I. My direct phone number is 201-679-0422, and I look forward to helping out all current homeowners with their refinances or any new clients with purchasing. Thank you guys, and I'll catch you guys next.